Good morning, everybody. This is Michael coming to you from GammaEdge. We're going to be doing our morning strategy session for Thursday, June 22nd. We'll start with the GammaEdge disclaimer. You can read through here if you need to. It is on the morning call PDF and Paul's morning call also. GammaEdge summary for today, Paul put out on the morning call PDF. I encourage everyone to look over that and understand it. Mark your levels. We are seeing some erosion in the call structure, which is exposing some of the put structure above and below spot price. I think this is important. We'll discuss the transition levels for today. Actually, we discussed it on open mic last night. If you were not present for that, it is recorded and in the hashtag media. I was discussing yesterday with some members about price just oscillating back and forth when we have a narrow transition or a wide transition. Yesterday we did have a wider transition and price just kind of oscillated back between a couple gamma levels that we had outlined. Today we're getting a little bit more narrow transition, which is more advantageous in what we want to see. A little bit tighter structure possibly allows us to play trades around that tighter structure. So we'll go over those and look at those. Again, we'll notice the PM settled here as all expiries, all these black tiles turned on to the right. If you're a new member here, this is the SPX PBI BMO chart that is posted in that channel. I encourage you to review the commentary in there. But again, narrow transitions outlined with the blue box. The yellow highlighted here is spot price. Transition is above that blue box, but is extremely narrow compared to where it was a little bit wider yesterday. Your eye should get drawn to the transition level if you're going to be doing some directional trades or looking for areas of price reaction. 4,400 overhead obviously remains the dominant call level there and dominant supply level that we're looking at overhead. And then as we get down below spot price here, we do see some put speculation happening. Obviously these are out of the money puts because they are both below spot price at the moment, eroding some of those in money calls that have obviously been probably closed. But we draw ourselves down to the JPM short call at 43.20. We have 43.50 here, and then below that would be 4300, looking at the net delta through this whole structure. So those are the areas that I'd be looking anticipatory of price reaction as we move to the downside or to the upside. For 0DTE, again, narrow transition. We'll see a theme across all kind of expiries and levels that there's a confluence of the same levels that we'll be seeing. So it's important to note those. When we start seeing a confluence, they become more important of areas of interest and possible price reactions that we will look to use or take trades around those levels. Again, 43.50, your eye gets drawn to that pretty quickly. And then below that, all the way down to 4,300 would be a stopping point there. And then we see this 43.20 come in down here. And then on the upside, 4,400, obviously large kind of iceberg sticking out there on the 0DT, as well as all expiries PM settled. For the 1DTE, transition here, 43.75. So there's that number again that Paul pointed out that referenced also that we're seeing a confluence of. Spot price is below that transition at the moment. So we definitely want to see how price would react as we start getting into this transition or moving up to the transition. Do we get rejected at the bottom of the transition, or do we start moving in the transition will allow us to play around these levels of 4,400 to 43.75, or do we move down to 43.50, which is a dominant demand level, with the amount of liquidity sitting there, net delta. And then below that we have 43.20 and then all the way down to 4,300. Not anticipating 4,300 at the moment for today, but possibly 43.50. And then if we see some weakness below 43.50, we see that some charm levels could kick in and cause us a little bit more aggressive push. You see these negative net deltas here, and then all the way down there they start subsiding into that 43.25 on the +1 DTE. For the expiry for the weekend to Friday, obviously we see the same levels, 43.50, 4,400 overhead, and see that narrow transition range. So that should really give us an idea of how this could play out into Friday. With the combo complex, all expiries turned on, we are still in a positive gamma environment. So that is call dominated above and below spot price. But we do see some chinks in the armor, or cracks in the ice, as we like to call it, erosions, as you see some. This is the 43.20, so this is the JPM here, but we do see exposure of some in the money puts here of these out of money calls being either closed or taken off. or at least through expiry. So all the way down here, 43.50, almost the bottom of this transition here, 18 billion net delta sitting there, 193,000 contracts, and then down here at 43.20, we see the JPM, and then all the way down here at 4,300, we have a large amount, 400,000 contracts sitting there. So above and below us, we really have those kind of goalposts, 4,300 below, 4,400 above. Anticipatory, we do not get above 4,400 today. 4,375 may be a stretch depending on kind of what the price structure looks like and what the CT looks like. So for my thesis so far, oscillating between 43.50, 43.75, possible push down to 43.20, 25 into Friday might be a good game plan. So we'll see how that kind of plays out. The landscape view, easily to see where the JPMs are, negative GEX 4,200, 43.75 here, and then 4,500 plus GEX. We do still see these calls being targeted out above us, even out here at 5,000, which was labeled yesterday. But we do see some of the erosion in the overall structure, can give us a little bit of a pause. And obviously the CT was eroding before we saw this come into the gamma structure. So that told you that there was a little bit of net selling going on under the hood. So just to kind of be a cautionary as you look for pullbacks in this kind of still call dominated environment, but a little bit of structure change on the short-term basis into Friday. Here's the SPY, negative gamma condition here, all expiries turned on, 430, sticks out pretty large here. The downside, 600,000 total OI contracts. I would look for this to be supportive, any pullback into that area, as long as the CT structure is maintained and we don't have any significant targeting below us. I would look for this to get involved on the long side. 435 here, that's kind of where we're at pre-market, so even down to 430, and then we do have 425 below us for all expiries. For ZUDTE, kind of the same levels, 435, see the transition here. We do have the negative net deltas there above spot price, so we do have the puts sitting there all the way up to 438, and then to pull back down into that 430 area. It really trails off there, at least on the 0DTE. So unless we see significant targeting, I would not anticipate anything below that 430 level, at least on SPY. Here's the expiries into Friday, same level, 430 on the downside, and then 440 on the upside. Pretty much the same thing we're seeing in the SPX. Those larger icebergs kind of sticking out, 440 and 430 there. We'll go to the trading view charts. Here's SPY. I have a pre-market high and lows marked. Obviously, I've marked kind of this 435 level overhead there, and then all the way down to 430. We're just below or just above COTMP. So any pullback down into COTMP may be an opportunity to get involved on the long side, anticipatory of those out of the money out of the money puts being closed, becoming in the money, as we saw yesterday. But as of now, we're just kind of oscillating between pre-market low and pre-market high. Even with the jobs news, we could not push above this pre-market high there. SPX, I've kind of labeled these levels here. We see the JPM short calls here. 43.50 is here. COTMP is actually sitting at 43.52. So it's a pretty decent confluence going into the morning that is important to watch. Zero GEX is 43.65. We just oscillated around zero GEX yesterday, so that may be an important area if we move down to 43.50, undercut, reclaim, and then move back up to 43.65 zero GEX. We need to get above zero GEX if we want to have any possibility to move higher into that 43.80, 43.75, which we discussed, which is the bottom of the transition areas. And then P-Trans up here is at 4,400. So then all the way down here to 4,300. I put Tom's target down there just as a sarcasm, but what we joked about last night was moving down to this 43.25, and at the bottom of that pullback for me would be the 4,300. Anything below 4,300 I'd be a lot more cautionary. 4,300 is still constructive in the overall pullback of the SPX. If you go to the daily chart, we were definitely extended, depending on if you're using TA or moving averages, but we just had a 3-day pullback so far. Significant amount of volume on the first day pullback, which you'd anticipate, but the volume seems to be trailing off a little bit. So we'll see how this plays out. My anticipation is to pull down possibly the 43.25, maybe even 43.50. We'll look for that. 4,300 would be the bottom of the pullback there. Then I would start changing my stance to a little bit more risk-off, cautionary look, depending on what the CT looks like. IWM has been relative strength to the market, so we'll see how that plays out today. We're still really holding well on the IWM. nothing's really changing that for me. If we started getting down below 180, then I would probably change my stance to a little bit more risk off. That's the top of that breakout area. But as of now, we've just kind of had a 3-day pullback in IWM right into that supply area overhead and that COI kind of 190 that we discussed. So I'll be watching 180 on the downside there on IWM. Qs had multi-day, kind of week runs. They were extended also. We did see some of the calls start to come off in the Qs. So just 3-day pullback so far. High volume first day. We'll see if we get a lower volume pullback down into Friday expiry. And then any pullback down to this 357 to 360, I'd be looking for some demand action to come in supportive. Anything below that, down to this breakout area, 355, and then below that, I would be a little bit more risk off with my type of trading. But at the moment, I'm cautionary because of where we're at with the CT. I'll pull that up. Red above cyan, still market model, that's still long, but the CT is starting to get below this colored ribbon here. So we'd want to see that get back above the colored ribbon. We always watch the slope of the colored ribbon. We'd like to see that turn back up and start to make a left to right slope ascent. But we want to see how this handles these moving averages here. We did have new highs outpace new lows yesterday, but just by a slim margin. So we'll watch that at the open. That is really important for us to continue that move up. We've had multiple days, as you can see above in these panes, the top panes here, of new highs outpacing new lows. So that needs to be sustained for us to continue our upward jaunt in the market. So this is a kind of a transition area. I think on the CT, we could go up or we could go down. We had seen the railroad tracks, but then we started leveling off, and you'll see this many times. The CT will begin to flatten and level out, and then it will decide to make a decision either direction. ARCX looks a little bit better than the tick US. Red is expanded above the cyan. We want to see that to maintain a upward movement in the market, sustained uptrend. And as of now, we just had a normal pullback in CT, holding above the colored ribbons, and we kind of flattened out here. So again, could be a direction up this way or this way. If we start getting above the top colored, the top moving average here, then I would be looking a little bit more on the long side instead of just a sideways cautionary stance for the market overall. So that's all I have at the moment. Hope that helps everyone for the day. I'll go ahead and open it up for questions or comments, and hopefully everybody has a great day. If anybody needs anything, if you're a new member here, just let us know. You can tag at admin and we'll get to your questions, or you can post in hashtag questions and we'll get to it as soon as possible. So for me, it's kind of a wait and see approach today. See how we handle some of these areas that we've identified kind of as transition areas. When we're below transition, it's a little bit more cautionary stance. Above transition gives us a little bit more kind of bullish stance for a move to the upside. But we've outlined and identified those transition areas, and transitions tightening up. So that is an inflection point in the overall structure. So we'll see how that inflection point plays out directionally wise for the day. All right, hope that helps. So I'll go ahead and stop the recording. Everybody have a great day, and we'll take questions or comments or thoughts here in just a second.